What is share market? Hi friends, good day. Today let us try to understand about what is share market, the history of share market, what are the types of share market, and the advantages of share market. Well, according to Warren Buffett, opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. Before we go on,
Please subscribe for more videos. Click the bell icon for updates.
what is share market? Share market is a place where the shares are bought and sold, where you meet the buyers and sellers for trading their stocks and shares. Share represent a unit of ownership of the company from where you bought it. For example, you bought 10 shares at the cost of rupees 300 per each share in a XYZ company. Then you become a shareholder of this XYZ company. This also allows you to sell the share whenever you want. By buying the shares, you are investing in the company. As the company grows, the price of the share will also increase. There are various factors that affect the prices of the shares. Sometimes it raises and sometimes it falls. All this buying and selling happens in the NSE, that is National Stock Exchange, and BSE, Bombay Stock Exchange. Now let's look into the history of the share market. It all started with the Indian stock market operating around a banyan trees, where the buyers and sellers used to meet and do the stock trading. In 1854, it is transferred to the Dalal Street, which is now popular as the oldest stock exchange in Asia, that is the Bombay Stock Exchange. It played a significant role in the growth of the Indian stock market. In the year 1992, the National Stock Exchange was established. It is the first stock exchange to provide the modern and automated screen-based electronic trading system. Types of share market. There are two types of share markets. One is the primary market, another one is the secondary market. Primary market. The primary market is where the securities are created. In this market, the firms sell new issue of common and preferred stocks, corporate bonds and government bonds, notes and bills to fund business improvements and to expand operations. In this market, the starting price range for the given securities is set by the underwriting groups consisting of the investment banks. An underwriting group is a temporary association of investment bankers who wants to purchase the securities from an issuer in order to sell them to investors for profit. This group also oversees the sale of these securities to the investors. An initial public offering (IPO) is an example for primary market. A company or a government raises money by issuing shares in the public market by the process of IPO. The issue can be made through public or private placement. Issue is public when the allotment of shares is made to more than 200 persons and is private if the allotment is made to less than 200 persons. Price of the share can be based on fixed price or book building price. Fixed price is decided by the issuer and mentioned in the offer document. In book building, the price of an issue is found out based on the demand from the investors. Let's look into the secondary market. The secondary market is where investors buy and sell the securities they already own. The share bought in the primary market can be sold in the secondary market. The secondary market operates through over-the-counter, that is OTC, and exchange-traded market. Over-the-counter markets are the informal markets where the two parties agree on a particular transaction to be settled in the future. Exchange traded market is also called as auction market, where all the transactions are done through exchange. These markets are highly regulated. In secondary market, the investors exchange with each other rather than with the issuing entity. Let's look into the advantages of share market. The advantages are: it allows the firms and corporations to secure long-term finance that will allow them to expand and grow. The investors benefit the most by participating in the growth of the company by investing in their shares. It assures investors with a reliable and secure clearing mechanism, so that the investors can be sure that the stocks they purchase will be delivered to them even if the counterparty to the transaction does not deliver. Besides the ability to buy and sell, the investors can get access to the information about all the listed companies so that they can make informed decisions. The market allows easy exit and entry from the shares of the company at a price determined by the supply and demand. Thank you so much for watching. Please like this video and do share.